Welcome to Behind Closed Books, the podcast where business owners and experts reveal the financial decisions that shape their success. Each episode brings you unscripted stories of turning points, hard calls, and the numbers that changed everything to pivot, recover, and grow. If you're building a business and ready to think differently about profit, pressure, and progress, behind every smart decision is a story worth telling. This is the show. Here is your host, Craig Sheets.
Hello, everybody. Welcome to another episode of Behind Closed Books. My next guest today, I'm really excited to bring on the show. She's the owner of a very successful fractional CFO firm by the name of the Business Profit and Consultancy. Her business focuses on assisting women-owned businesses with fractional CFO work, but works with all businesses of all shapes and sizes as well. Her clientele usually ranges from $1 million to $10 million in gross revenue and are made up of a range of business types. She once worked on the merger of a huge Canadian bank with 46,000 employees over a 3-year period with 70 team members. Not only did her project finish on budget, it finished on time with no exceptions, and only a handful of people have ever accomplished this before. When not working, she likes to travel with her husband. She was a prolific marathon runner, competing in 11 marathons to date. Her business is now her hobby, and helping business owners succeed is her passion. With that, everybody meet my next guest, Diana Miret. Welcome to Behind Closed Books, Diana.
Thank you, Craig. It's a pleasure to be here with you.
I am so excited about today. We have a couple topics on board today I thought we can start with, but let me just give a big overview of what we're going to talk about today. The topic of fractional CFO, what is a fractional CFO? I think a lot of people know what that is, but they don't really understand it. So I thought we could talk about that. Successful ideas from a CFO's point of view, mistakes to avoid from a CFO point of view. That is going to be very helpful to people. And what's the difference between a CFO and an accountant or CPA? Is one backwards looking, one's forward looking? Let's kind of explore that. And what are the latest trends in fractional CFO work? So why don't we start with, what is a fractional CFO?
Well, Craig, a fractional CFO, generally a CFO of a large business, right, is on the executive team, and they're responsible for the accounting function. These individuals generally are very highly paid individuals, as you can imagine. They work on treasury, they work on accounting, of course, tax, fundraising, everything that's related to the business and their money. But a small business can't afford that function and could really use a lot of that, firepower.
Yes.
So we bring that in small bites called fractional. We bring that kind of power or that kind of thinking to the small business owner, and they kind of use it a little bit at a time as they need it. So it's, and I'm going to jump to one of your questions about what's the difference between a CFO and a CPA and so on, because really that's how the best way for a business owner to understand what is a fractional CFO. So as you know, an accountant and a CPA are vital to an organization, very, very extremely important to the business owner, but generally have a compliance focus and talk to clients generally maybe 2 to 3 times a year. If they're lucky, they get a chance to talk to their CPA several times a year. And it's usually revolving around tax, maybe some tax strategy. That's one. Excellent, excellent, excellent. Then there's the bookkeeper, who really is responsible for putting money in the right pockets so that, of course, we are in compliance, as well as we have our true actual financials in right where they need to be. But in the meantime, between the 2 visits a year with their CPA, who is there to consult or talk to the business owner about, am I making money? Am I profitable? Do I have enough cash flow to hire this resource that I want to hire? Do I have enough money to go and get this piece of equipment? What if I want to sell in 5 years? What do my financials need to look? Those are the kind of questions that a business owner could have, and they don't have anyone to ask that question of, generally. So that's what we do.
You could almost say then that the bookkeeper, the CPA, and the CFO can work together. It's not like oil and water where they can't be in the same room. They should be working together cohesively then.
Absolutely. You said that beautifully. So the bookkeeper and the CPA are usually have a backwards focus, which is extremely important.
Always joke and say, as a tax person, I'm always tripping because I'm looking backwards at what has happened, and definitely in bookkeepers, either looking down or backwards as well. So we're always saying, okay, what's been, not what's going to be. Yes, we do meet once a year, like you said, as a CPA, do a little tax planning. We wish it was more. We wish it was monthly as CPAs. But you mentioned that spot on. Tax planning is a little forward looking, but it sounds like CFO works more forward looking.
Correct. In fact, I spend about 60 to 70% of my time forward looking.
Wow. Wow. And I think what happens, I have clients that do monthly bookkeeping with us. And I think what happens at the end of the year, the client will say, well, yeah, well, what happened? Why, what's going on throughout the year? Why isn't any planning done? It's like, well, you hired us as your bookkeeper and your annual tax preparer. We've been trying to get you to do tax planning and other CFO work through someone else. So it'd almost be like, right, you want to do tax planning, that's one slot. You want CFO work, which is budgeting. And like you said, you want to sell in 5 years or doing planning. That's another slot. I think they try and put the bookkeeper in that role of all three. And I think there needs to be a distinguishment that they're three separate roles.
Absolutely. You are, and that is one of the, challenges that we sometimes face as fractionals because once you start digging into numbers, right, with a business owner and you go, oh, you're spending 5% of your income on marketing. They're like, I am? Well, wait a minute, what am I spending it on? And then all of a sudden now you're in the weeds. And as a fractional CFO, we have to stay away from the weeds. We're not of any good to you in the weeds. We always say, please go talk to your bookkeeper about how you spent your marketing dollars and are they properly allocated? But at the end of the day, let's just directionally say we're spending 5%. And what does that mean? And are we getting a return on investment on marketing?
Okay, that's good because I think I think CPAs also need to learn to have a conversation with their clients and say, listen, there's 3 slots you need filled. We're doing one with the bookkeeping. Don't be confused. The tax planning is part of that. And certainly as you grow, and I think we mentioned earlier on the intro, working between 1 and 10 million or so in that wheelhouse, you need to start thinking about getting a CFO. In an accounting and tax perspective, I always tell clients if they're under 65,000, stay self-employed. 65 to 250, maybe think about doing an S corp. 250 and more, you want to bring in a tax person. What's usually the range? That sounds like it's $1 million to start thinking about bringing in a CFO.
Fractional CFO can help, but they really can't afford us until they're at about 200,000 a year. Because they have to pay for the service, right? So we don't work for free. So at 200, they can begin to afford a fractional. By the time they hit 10 million ish, depending on the industry, they really start needing to get people in-house, right? They start to maybe need a controller and someone who can run some financials for them and some spreadsheets designed by a CFO, but that can be executed internally. So generally, by the time they're 10 million on up, they really need to start looking at someone in their own wheelhouse. And that's fine. That's perfect.
And we found exactly, so we do the bookkeeping and tax side. We found our wheelhouse is startup because we help companies start up, set up the new company, state filings, federal filings, EIN, et cetera. All the way through, we find exactly that 10 to 12 million. They need somebody in house, and that's kind of our wheelhouse. Companies grow with us bigger than that, but they typically started at the 5 million and now they've grown to maybe 20 million, but we've been with us for that time. But then they start going, oh, I need more work. I need more help. And that's when the new internal person comes in. And we found the same thing. It's exactly what we talked about.
And that's good. And that's a really good thing, because that means they're growing. And honestly, if someone tries to hire me and they're making 200 or under, and they're like, well, but I don't understand my numbers. I'm like, it's important, but listen, let me tell you something. Under 200, you need to focus on selling and selling consistently. You need consistent revenue, or, knowing your overhead numbers and your margins, of course, is somewhat important. But honestly, until you're at 250 on up, focus on predictable sales.
Yes, that makes perfect sense. And I think what happens is people forget that well, these big accounting firms, I'm trying to think of the big ones, Deloitte, whatever it is. Well, they charge so much money. I could never get somebody with that kind of expertise down at my level. I'm only at 5 million or 3 million. But like you said, the fractional CFO brings it in. I think you mentioned exactly as you said, fractional in pieces, not full time, but you bring that same experience as the bigger firms bring as well, right?
Exactly. We try to. The one area that I personally tend to stay away from is financing. Looking for, I mean, I can help my clients create their pro formas and things like that for the banks, et cetera. But I'm not going to go out actively looking for them to, for loans and things like that. That's generally pretty time consuming, and it's not a good use of neither one of our time. So they have to go answer those questions anyway with the bank. Good does it do me to be in the middle? To go, he said, she said. So
Said you got to be able to provide a value add, budgeting, planning, looking to the future, using the information. So you work hand in glove with the CPAs. You might say to the client, "May I speak to the CPA?" Do you often speak to CPAs?
absolutely. In fact, if they have a CPA, I usually insist, would you please connect us? And then I tell the CPA, listen, I just did their forecast, for example. I just did their forecast. We're working through the numbers, but you know what? They're looking at making 100,000 in profit this year. Again, anything can happen, but we need to think tax strategy because we're forecasting 100K here. And so that's how I work with them and see. They don't like, and by the time they send their books in mid-January and they have $100,000 net profit, and the CPA goes, well, there's not a lot we can do to offset that. Had you told me sooner, we could have done something. So that's my job is I will say, look, this is where we're headed. I will keep you updated every quarter if something changes, especially if it goes up. If it goes down, not as worried, but if it goes up, I got to tell you, and I will tell you.
And I think we joked. I think we call it post-mortem planning in tax. Like, what can I do after the fact? Like, well, you shouldn't tell me before. They're inter vivos, but same thing. Don't tell me in January. Tell me in June. Tell me in April. Tell me in February or August. We can do things. And I think sometimes CPAs now, from the professional standpoint, get worried. Well, a CFO's coming in. They're not going to want to work with me anymore. I've lost this client. They're going to the way of a CFO. I better be careful and protect myself. And I think that guard needs to come down from CPAs to say, no, no, no. This is a helping hand, not an adversary to be worried about.
Absolutely. I mean, if your CFO is trying to go into your space, they better have the word CPA behind their name. I understand that is not my wheelhouse. I do not keep up on the tax regulations like a CPA who does tax strategy does. I am very clear that that is outside my wheelhouse, and I tell my client that all the time. Let's talk to your CPA about that. Maybe you should be an S corp now. Maybe you should be looking at a C corp now. Look, what does it mean if you go up to C corp? What does it do to your complete tax picture? Because the other thing a CPA sees that I don't ever usually get to see is the personal side. I don't want to know their personal other side, what their spouse makes, what their investments are making, etc. I'm only interested in the business component. So the CPA has the far broader view of the tax return, all the things that make up adjusted gross income, et cetera. And I don't have that. So I stay very clear.
Yeah, that's great because the CPA does have access to things. It's funny, as the CPA, I forget that I have access to information that is important for the overall person. And I think having that gives me the advantage strategy of saying, great, I can see both the personal and the business. Yeah, they don't want to go C Corp because of this. They don't want to go S Corp because of that. And then that is where the CPA can be helpful. That's great.
Absolutely. And I'm very clear on that.
That's great. That's good you do that, and it's good to know that working with CFOs, doesn't risk the CPA's relationship with the client. They can work hand in glove. Now, as a CFO, what are some mistakes or pitfalls maybe for business owners to avoid? Maybe a couple of them you can think of off the top of your head.
Well, it isn't about necessarily working with a CFO. What are some of the pitfalls? What I want to reframe the question a little bit. The biggest mistake I believe business owners make is they hire a fractional CFO or a CFO, and then they go make an investment, don't discuss it or understand the implications. They either hire someone. Oh, I hired so and so, or I bought this piece of property, or whatever. And now we've got to figure out how to pay for it. And to me, that's just a waste of not only their time. It could have been a bad investment. Maybe it wasn't. Maybe it was a great investment. Don't know. I'm not trying to second guess them, but you're paying for someone to talk things through with you and discuss them and give you some ideas and so on. Why don't we use them? Don't just wait till the next meet them to inform them. Hey, by the way, hired a new COO. Oh, good. Okay. We've been cash flowing negative for the last I don't know how long, but okay.
So communicating up front is something that's it's very important with the CFO. So you have all the information available to you as possible. Uh, and you can make good informed decisions because otherwise you're making them half the decision or you're making it again after the fact before you get the information altogether. You're making the decisions after the fact. Have you seen mistakes that clients have made that were like, oh boy, I not feeding you information is definitely one of them. But have you seen a mistake that clients made over and over, or something you see clients make more often than not that maybe you could help them as a pitfall beforehand, kind of advice wise, big picture?
I'll tell you, I don't know, maybe it's the people that I have seemed to bring into to working with me, but I see an awful lot of business owners using the business as an ATM. I see them using it as a lifestyle thing rather than a true business. So if the business made a little extra money, the business owner thinks he has or she has extra money and they pull it all out. And then they really want to do some expansion. They really want to, purchase a new location, whatever. And there's no money in the business. They've been spending every dime the minute they make it. And so now we've got to go to banks and explain why we have great sales and no cash.
Right. And a lot of times they say, well, geez, I know I didn't make any money. To me on the back end, I get this where they say, I know I didn't make any money. Why am I paying any taxes? I have no money in my bank account. I said, well, money in your bank account and how much profit you made are two different things because when you withdraw money for personal reasons, that's not deductible. It lowers your bank account, yet you're still liable for the tax liability from the business point of view, not the bank, not the cash in your bank account.
100%. I think I get that question, if not once a month, at least more. Is why does it say I made 100,000, but there's only 5,000 in my bank account? What's wrong? Are my then they try to blame it on the bookkeeper.
Oh, they blame us
My
all the time.
bookkeeper doing something wrong. I'm like, no, your bookkeeper doesn't, you know, go and
It's good to know you got our back, but we have tire tracks on our back as bookkeepers from getting run over not from the CFO, but from the client saying, oh, you're not doing that. I'm like, whoa, hang on a second. What I do, the first place I take the clients, I go to the balance sheet. I run a balance sheet year to date, and then I go right to the equity section to owner draw. And let's take a look at this piece by piece. A massage thing or Publix or, going to McDonald's, whatever they are, different transactions. These are all the things that you've been doing with the money, and that's why your balance is 5,000, not 100,000. Like you said, ATM.
they treat it as a, oh well, but I'm not paying myself as much as I should, so I'll just pay myself by putting all these things through the business. And then as a CFO, I can't advise them on how they're running their operation because it's so murky, right? I have a business owner now who has a pretty successful business, but they run about $200,000 a year of, shall we call it discretionary spending? Let's call it discretionary spending. And so they're only making like 8% and so on profit. They think they're making 8% profit. And I'm like, your operation's actually doing way better than that. Operation, because I remove all those things and I bring them to the bottom of the P&L under other expenses if they're on the P&L, or I put them over to equity. But I'm like, dude, your operation is actually doing well, but you're siphoning it all out, that trip, that thing, that, whatever. So, and then they don't, well, I'm spending 20% on payroll. That sounds like a lot. Well, actually, based on the true margin, that 20% to payroll is just fine. But if you're just milking it and your overhead looks like it's 90%, then yeah, 20% for payroll hurts. But that's not payroll's fault.
No, blaming the wrong thing. We call it co-mingling of funds, and I always scare people. You pierce. We use this word from accounting way back. Pierce the corporate veil.
We use it all the time.
I love that. And say, listen, here's what I say. Listen, if you don't take your business serious and you pierce the corporate veil, the IRS won't take your business serious, and you'll get your S corp stripped away from you, and you will be back to being self-employed, paying 15.3% in no time. They'll be glad to do that. And guess what? You can only take a loss 2 years in a row on a Schedule C in your personal return. You're going to be like in a business setup jail, basically, by the IRS if you don't listen to us.
We talk about the corporate veil all the time too. Especially I work with real estate investors and beauty salon owners and things, and I'm like, girl, one slip and fall, and based on the way you're spending and how, what accounts are feeding your business, they could go after your personal assets because of that slip and fall. Is that something you want? I'm like, no, they don't want that. I'm like, well, hey, stop it.
This is what can happen. And you gotta scare them a little bit sometimes to say, right, wake up, get yourself in trouble because we're looking out for you. I always say I'm looking out for future X, whatever the client's name is, not current X, whatever client's name is. So if it's Mike, looking out for future Mike, current Mike may not like me, but future Mike will, because I'm going to protect you in the future. That's how I refer to it.
And that's exactly what we try to do as well. And by showing, and then I try to give them a little bit of hope on a spreadsheet. So I sit there and I redo their spreadsheet and I look at it and I go, look, if we were to like tone down some of this stuff and put away money for reserves, put away money for tax, put away, to save towards the next hire.
Right.
I believe in bank accounting, using bank accounts. I'm a profit first professional in addition, but it's not all about just implementing profit first, which is wonderful, but it's the concept of save for it.
Right.
Rather than find it. So when I went to hire my first CFO associate to work with me, I opened up an account and I saved 3 months of what I thought I would be paying a CFO in that account before I ever hired or interviewed the first person. Why? Because I now know that I can pay this person. First of all, if I can put the money aside, that means I have the money, right? So now I've answered 2 questions. And then the other thing I knew was I can pay them for 3 months while they're learning. And I'm not worried that eventually they'll start to make money and I'll start to be able to repay that. But until they know and learn, and I give them 3 months. Now, to me, I sleep better at night. I have the money in the bank. And if they don't work out, well, we start over and we do it again. But I save
a nest egg
for everything.
Yeah, for everything. That's a really good idea. Is budgeting and working with a CFO to budget and plan, and then go on after the fact to look at what was budget, what was actual, to say what was the variance and why was it missed, if it's legitimate versus, like you said, spending like the ATM, or boy, all of a sudden I realized this tax software or this or whatever software we use increased in price. We didn't expect it. That's a business expense. If it's, I wanted to take a trip around Europe for a month, that's a different kind of reason. You got to figure out why wasn't budgets hit, why was variances, not met, and what was the reasons behind them to avoid that.
And things like, don't you want to save for your 401k and just put it aside so that you can do that and not have to worry that you got to write a check at the very last minute of the year or the deadline so that you can make it. I mean, why are you killing yourself? Like, let's put it aside now. And those are the things I build into my forecasts. And then they realize, wow, I don't make enough. Well, let's find out now that you're not making enough, right? I'd rather find out now than on December 30th that you didn't make enough. Let's find out in April or March that we need to up our sales by 10%. I just had that conversation today with a business owner. I said, you're not going to cover your expenses. You're going to run out of money around the July timeframe.
It's a scary thing to happen now, but it's a terrifying thing to happen in September if you don't have that conversation, because then it's a whole different conversation to have.
Yep. And she was like, well, I don't know what I'm going to do. I'm like, well, we have a little time to think about it. You don't have any time when you wake up with a negative cash balance in September.
Right, exactly. That makes sense. There's a lot of good things to have as a CFO, and it's great to know CFO has one role, CPA has another, bookkeeper has another. All those slots should be filled up, and as you grow, you need each one of those. It's important. So I think it's good to know that you can have a team. They all work together and trust everybody. It's a team.
It's a true team, and if they don't wanna play together as a team, then that's a whole different conversation,
And you got the wrong team. You're right.
and they have the wrong team, but that doesn't mean that the function's not right, it means that the individuals or may not be the right team.
Great point. I love you brought that up. And I'm glad you brought that up so clients understand the different roles and how important it is to say, well, year end, Mr. Bookkeeper, you didn't do anything for me. Well, yeah, we did. We did exactly what we were supposed to do in our slot. What you forgot to do is bring in CFO worker. And that's what was the different missing piece. So the CBA can identify that to bring in the CFO when needed. The CFO can identify if the bookkeeper is not, sufficient, or the tax person can identify it. Everybody can also look out for each other to make sure the right person's in the right slots.
Absolutely.
That's great. That's great. Well, that's good. We got through everything there. I thought maybe we could take a minute to kind of go over you, Diana, as a person, not so much when you started working or went to school, maybe your background. A lot of times people want to know more about you, but where did you grow up? Where did you go to school? Where you're from? Any family members? Where did you grow up actually?
I have a very colorful, thing. I was actually raised in South America. My dad was an executive for a large corporation, and he was moved all around Central and South America. So I was actually born in Mexico City, even though my family is not Mexican, but proud to say I was born in Mexico. But, we lived in South America, Central America, as he was a regional executive for this corporation. And then he was in charge of North America, so we moved to, their corporate headquarters in North America. And then I went and married a Canadian, which is what took me
Wait, you go from South of America to the North of America. You've hit.
I needed to go top to bottom, so I married a Canadian, lived in Canada, and, got to get to know up there.
Where in Canada? Where did you live for a while?
I lived in Toronto, which is the financial capital of
Oh yeah, yeah. I went to school in Niagara, right over the border there in Niagara Falls. So I know the area. We used to go to Toronto on weekends for fun. Beautiful town.
it is, it's great in the summer.
Yes, in the summer. That's exactly right. It's a good summer. But South America must have been hot all year round when you lived down there, wasn't it?
It's the opposite. So when I was living in Argentina, it's winter in June. June you're in jackets, December you're in the pool. So it's the complete
Oh, but
opposite.
it did have cold seasons then. Oh, that's right, Argentina.
Oh yeah. Maybe around the equator you get more of a tropical, but when the further south you go, it's the
And
opposite.
I know that's where is it Argentina or somewhere or Chile where they leave for the cruises for the penguins and all that down in Antarctica?
Yeah, it's down the Antarctic. They go down from Chile all the way down to what's that called? Tierra del Fuego, and then back up.
That's it. Yep, going to see the penguins. So you got to grow up. I'm sure you met a lot of interesting people growing up, and a lot of different cultures and a lot of different foods you got to eat. I imagine.
Oh yeah. Yeah, and I'll tell you the thing that has stuck with me forever is that the United States, we have a gift in living in one of the best countries in the world, and I'm not dissing any country by any stretch. I have a Canadian daughter. I'm a dual citizen with Canada, so there's no feelings here other than pure admiration. But in the United States, we have a freedom to open businesses. We have a freedom to really pursue happiness, uh, and and education. And my husband, who's also from the Caribbean, I told you it was pretty crazy, pretty crazy family. Uh, he says it very well. He says, in the United States, here we have a gravy train that goes by the front door every day. You just got to get on it, and there's so much opportunity here, and there's so much potential. And as a small business owner, you can pivot, you can change direction. And you don't have governments looking over your shoulder, other than taxation. They're leaving you alone as long as you're not doing anything illegal, and so on and so forth. And I'm like, this is the greatest country in the world. And it really, I'm so proud to be able to serve business owners here.
Wow, that's great. And you got to see them from tip of South America all the way to the north in Canada, and you've seen it all. And working with the business owners you have in America makes you appreciate it more. That says a lot. That's really impressive. Did you have any siblings growing up? Was it just you?
No, I have siblings, and they were born in different parts of the world. One was born in Puerto Rico, one was born in Argentina. It was like, no, yeah. It's, when people say, "So where are you from?" It's I have to hesitate because I'm like, what do I tell them?
No, what do I tell today? Now, does your siblings, did they have spouses from other countries as well?
Actually, they married Americans, and they pretty much stuck to America.
And they're all living in America then, like you, they live here. Oh, that's great. So you had a lot of opportunities to travel. Do you still get a chance to travel back to places you used to go to, or do you stay more in US and Canada?
I stay U.S. and I do go to Mexico when it's not too difficult down there. I love Mexico. I think Mexico is an absolute gem. It's a beautiful country. But I love Europe.
Oh, Europe's great.
Fallen in love with Europe. So I try to structure my business so that I can take. So that's one of the reasons why I went into business for myself too. Was I wanted to control my own schedule, like most people, and I don't want to. I want to travel to Europe and spend a month in Italy or a month in Spain and be able to do that. And so I love Europe too.
And
So
that's great. People can work with you like that, and working with you, knowing they can have access to you whenever they need. And as a matter of fact, from a marketing perspective, how can people reach you? What is the best way to reach you? Email, phone, like what's your target clients? Maybe tell us a little bit more about who your ideal clients and how to reach you.
oh, you're very kind. So my website's the best place to find me, dianamiret.com. Super easy. And I'm going to be changing it, but for now it's dianamiret.com and it'll point. So you can enter your information there. It tells you how to get a hold of me. It talks about who I like to serve in particular. And I even put my pricing on there. And I do that so that people will understand um, what it takes to work with someone and so on. I'm always open to a conversation, whether they can outright afford it or not. Sometimes one of the things that I wish my colleagues would do more of, but I'm certainly doing it, is I'll offer packages of a few hours. So rather than ask them to commit to a monthly bogey every month, you have to pay much to pay. Obviously the benefits are better if you're working monthly with someone, right? You have a consistency and a cadence and all that. And if they can afford it and I want to do it, it's awesome. But sometimes they just need to talk to someone. Like I was right before this call, I was on somebody's looking at buying a building with a big number of vacant apartments in it, and they want to run some numbers. So they just want someone to talk to. Hey, what about this? What about that? What do you think of? And so I offer packages of hours, and they can use those as needed.
So there's multiple ways to get to work with you. It doesn't have to be not a cookie cutter way that you can work with them. It's all on your website. That's the starting point. And then, is there a way, is your contact information on there as well? They can just fill in their name and then you reach out to them. Perfect. Okay. And you said it was Diana Miret. So it's DianaMiret.com.
Murat.com. Yes.
Okay, great. Well, I'm so glad you joined us today. Thank you so much for being on. I know our guests will be super excited to hear more about you and reach out to you. And definitely we can find a way to work together as well, maybe professionally.
Absolutely. Oh yeah. I'm always looking for a great CPA that's responsive for my customers. When my clients need a CPA, I don't want them to wait 3 weeks to get a call back.
No, we have a sundown rule here at the firm where even if we can't help them that day because we're busy, within sundown that day, we call it close of business, COB.
I love
We respond back and say, hey, can't talk to you today. How about Thursday? But at least we reach back out.
That's fantastic. So yes, we're definitely going to work together.
It was very nice to meet you. Everyone's going to be excited for this podcast. And thank you so much for joining us.
My pleasure, Craig. Thank you for inviting me.
Oh, you're welcome. All right. See everybody on the next podcast. Have a great day.
Bye.
Bye.
Behind Closed Books podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.